On the retail statistics, we see a lot of variation in that part of the market as well. There's clear challenges. Say in the last year, we've seen 10% market write-downs on the high streets outside the southeast. The most recent part of the market to kind of fall away in our numbers was retail warehouses. They typically held up relatively well, but they're feeling the challenge now from the internet as well. But then, following from Andrew's point, we do see a kind of polarisation there, because if you're looking at the shopping centre market, the larger prime shopping centres are able to create that kind of retail destination for themselves. Their values have held up, so they haven't seen a capital write-down. They're one of the few parts of the market, in addition to central London, maybe supermarkets as well, that's seen a slight uptick in values. But the in-town shopping centres, values there have fallen between 7-8%. So yeah, there's variations within that retail sector, and even on the discount side. So you go to the other end of the spectrum, discount retailers are faring relatively well, and previously that's been quite a short-term phenomenon. But if the kind of slowdown in the economic position is going to draw itself out, then they may present a stronger opportunity for a longer time frame than they have in the past.
We're very interested by retail. We think retail is an attractive and interesting investment to get into now, both frankly in the UK and in the continent. Partially that's because of the problems that are going on with retailing in various companies. Partially it's because it's becoming somewhat unfashionable amongst some of the institutional investors, and for us that often represents an opportunity. But the key point there is that you have to be. At its heart, it is a very granular business. It's very asset specific. You need to pick your spots. Supermarket anchored town center shopping centers that are well used with an established clientele, there's going to be a market for them. Now, some of the stores that are in there are going to be, a lot of the big chains, going back to the multiples, they're going to have fewer stores, they're going to have smaller stores. If you have leases that are linked to turnover rents, this is going to become a complication, because with internet shopping, how do you measure the turnover? So, there's a whole series of adjustments and changes that are going to need to happen, both legally, structurally, and physically, with well-located, intrinsically sound shopping centers over the next 10 years. So for us as a value-added investor, that is an opportunity, but you better pick your spots very carefully, and frankly, you have to buy them at the right price.
And are you looking at specific locations, both in the UK and in Europe, and do you only focus on a certain size, or?
We're fairly broad in that. I mean, it's not limited on a specific size. The key criterion that we tend to favor are city center, town center, urban environment type locations, where even if it's a smaller town, and even if it's a 30-year-old center, it is the dominant location within that town. And then you have something that you can build up a business on.
Yes, well, in a way, I think what Peter said really hits the nail on the head. It's very much a local business. I think it's very difficult to generalise about retail. It really is about how individual schemes and units fit with their catchment, what sort of support there is for the businesses that trade there. So we do quite like retail, despite my rather negative comments about the UK. I think the UK is a market where you need to be particularly selective, but we invest in town, we invest out of town, we have shopping centres, retail parks, some unit shops. So it's really understanding what makes towns work, what makes the pitch within a local centre attractive or unattractive, and how that might change. If you sort of cast the net a bit wider across Europe, I think certainly markets like Germany, I think that there is a lot of pressure to put money into retail in Germany at the moment. It's one of the more lively economies in a pretty limp bunch in Europe at the moment. And again, it's a case of looking at the individual schemes on their own merit, but I think Germany is an attractive market for retail. I mentioned the Nordics before, again, relatively vibrant retail economies. Norway just feels very different from other parts of Europe. Certainly as I travel around, you can sort of pick up the signals from that. So, retail certainly has a part to play, and one of the things that is very attractive about the sector is the multi-tenanted nature and the ability to really create value through reconfigurations, lease restructurings, bringing in better tenants and so on. So as an asset management play, it's probably the most attractive sector for us.
Do you have activity in France and in Italy as well? Because I think the view on Italy was that the retail side is holding up. Is that
yes, that's our experience. We have a couple of factory outlet centres in Italy, and to some extent that's a segment of the market that is perhaps a little bit more resilient in a downturn. But people have to shop somewhere, and although they're being more selective about what they buy, how much they buy, where they buy it from, if you're able to really dominate the local market, then there are decent returns to be had. So Italian retail isn't something we've been making a big move into at the moment, but we're quite comfortable with what we've got.